Yep. All right. Welcome everybody to a live episode of Elevate Your Grind. We're here live at the Benzinga Cannabis Capital Conference, which they purposely did to make me choke up on that. As you can see, for the first time, we are no longer stuck under the elevator. We're in the main room. We have the show going on right behind us. There might be people making weird faces in the window. I feel like I'm on C-SPAN. I would like to welcome in my friend, my guest, Steve Ernest. Thank you for joining us.
Thank you, Todd. Thanks for having me.
Absolutely, man. It is always great. I'm glad to see you in my hometown that I don't have to travel to where you live usually because it's cold as fuck.
Yeah, I've been here 5 times this year already. Our second office at Chicago Atlantic is in Miami.
Beautiful.
So, yeah, I've really been enjoying my time in the winter here.
So tell me a little bit about Chicago Atlantic. I know you're doing really well there. I'm very happy to see it. I'm a little bit jealous, but it's always great to see the people you come up with doing well in this industry, especially the state we're in right now.
Absolutely. I really appreciate that. Yeah, so Chicago Atlantic, we are one of the largest debt funds in the cannabis industry. We've deployed over $1.5 billion across about 50 operators. And we're still deploying capital. We're one of the few groups that is still actively writing checks in the space. And it's really the quality of the team, the underwriting team, the folks like myself who've been in cannabis for just shy of a decade, who really understand how companies are actually profitable and companies that'll pay back their debt, right?
Yeah, man. First of all, I just want to say this is my first time doing this with people behind me. This is fucking distracting.
Oh, and there's a ton of people walking
I have everybody on here walking. I am too ADD to be doing it this way. But you kind of made that joke that you're one of the few people that are still allocating capital in this industry. Hopefully, I think we'll have Carson Helmiston on the show later, but she posted a while ago and she keeps coming out with the job reports and the salary reports, which is awesome.
Banks, right?
No, the job reports for the cannabis industry. So, Banks.
Carson. Yeah.
I thought you said Banks.
No, Banks. Yeah.
No, she's great.
Yeah.
She's one of the few people I've had on the show. And after I'm like, I don't know if I'm smart enough to do this shit, but I quote her LinkedIn post, even though everyone did it, 1.5 billion into the industry in 2021, under 300 million in 2022.
Yeah.
A huge decrease in funds into the industry. Is this a symptom of cannabis specifically right now, or is this something we're seeing in the greater economy as well? Because there is this whole truth that the pandemic kind of artificially inflated our economy. You see it in tech, you see massive layoffs there, and cannabis is doing the same thing. Are we experiencing it more because of the nascency of our industry, or is this just a magnification of what's going on in general?
Yeah, I think that the nascency of our industry magnifies all of the issues that we're seeing outside of cannabis. So obviously inflation is something that everybody's talking about.
Yep.
It affects everybody across the board. Now, what makes it unique in cannabis is most companies, although they suffer from inflation on CapEx and OpEx, paying their people, paying for construction projects that are delayed and more costly, most companies benefit from inflation on their revenue, where cannabis suffers from commoditization of the revenue.
Yeah.
So in cannabis, you've got revenue declining, you've got costs increasing, all while the cost of capital is rising for macro reasons, such as the Fed funds rate rising, and then industry specific reasons, which is just the supply and demand of capital in the space. There's many more dollars requested than dollars being deployed.
Yeah.
To your point, and I don't know what she was quoting. I used to work with a group called Viridian Capital Advisors. They do a deal tracker, which run by Frank Colombo, who I love. He's a total savant, and his research is incredible. But they show that year over year, I think, it was like 1.5 billion to 300 million. I mean, you've seen the equity capital, it's like 95% down year over year.
I think it was 97, I thought.
Yeah, right. I was trying to be conservative, I guess. But yeah.
It's just scary, right? I'm like, wait a second.
Yeah. So if you just take out the rich uncles in the space, you can just round up to 100, basically.
Yeah.
I just joke. I'm like, call your rich uncle, look in your couch cushions. And outside of that, there's no institutional process to go out there and really raise equity. So, my job at Chicago Atlantic, I think to a lot of people, it sounds like a fun job. Like, hey, go deploy the only money that's in cannabis. But I also know what a good deal looks like. And I also know what protects our capital.
Is it a problem because most people just have a ton of debt already?
That's certainly part of the problem. If you looked at any of the projections or pitch decks from, look at the multi-state operators and their EBITDA projections versus their EBITDA actuals, looking back from, 21 projections to 21 actuals, 22 projections to 22 actuals. Most of these were down or off the mark by, 50%. So you're like, hey, I'm gonna make $200 million in EBITDA next year. It comes at $100 million of EBITDA, and you've got $100 million of debt, and you're like, okay, well, again, now you have the rates rising and all these sort of macroeconomic issues, and yeah, there's a lot of leverage in the space. So, you really have to understand, the old adage of don't make dollars, it don't make sense.
Yeah,
right.
Dude, it's crazy to me because I talk to people at larger companies. I don't want to get too specific because if I speak about it, they might know who they are and think other people do.
Yeah.
But they're essentially raising capital to pay off debt, and it's just taking it from the left pocket into the right pocket, right? You're not actually doing anything for the operations of the company. You're just making sure that you're not going into default on your debt, and you're raising significant amount of capital to do that. That's nuts to me. It is absolutely nuts.
And we do not participate in those types of structures. Again, for us, it's groups that have hard assets, right? Obviously, real estate is the easiest, but groups that actually have cash flows and having low leverage on those cash flows and deploying capital towards EBITDA accretive investments.
So, a while back, I always thought that the Budweisers, the mainstays of the cannabis world, were going to be these mid-tier, low-tier MSOs that started as a single state operator, operated really well, moved into another state opportunistically, and maybe they're in only like 3 or 4 states at this point. And I can't think of any examples off the top of my head because unlike your friend Colombo, I do absolutely no research. I just make assumptions based on headlines.
Fair.
But that's the charm of the show, right? So these companies that kind of, I'm sure they raised some capital, maybe friends and family, maybe something beyond that, but more so bootstrap it, for lack of better words. They made money in one state, used that money to open another state, so on and so forth. Maybe they took some debt on, but then they paid it off when they started operating in that state. Are those the type of companies that you're seeing right now that are starting to emerge as, call it, the very small winners that someone like you can find? They're like, hey, listen, we don't have any debt. We're going to we want to now blow up. And they would come to someone like you. Is that what you're seeing? Or is this some fantasy I'm creating in my head that this company exists?
I mean, so one of the something I did over the last year, I closed a deal with the group called Maramed.
Heard of them
in February. They're a big, multi-state operator.
You see the applause they're giving for us, man?
I know, right? They love us. Right? We're pretty popular. But they were one of the few multi-state operators that was not over levered, right? And they had EBITDA accretive projects. So a lot of these MSOs, they went in and they said, hey, we're gonna build out in Arizona and Colorado and Michigan and a lot of these markets that just became really, really quickly commoditized. And the reality is a lot of folks thought that change was going to happen faster than it did. We thought we were going to get uplisting, a safe banking, and a lot of sort of alleviation from the ills of working in the cannabis industry. And it didn't happen. So what I do is I look out there and I say, what is profitable in today's cannabis industry? And what I see is border dispensary plays. It's people talk about limited license states. Well, what about adult use states that are unlimited license, but a municipality on the border of a state that's illegal, right? Such as Kentucky or Tennessee or Wisconsin or Minnesota,
Idaho,
Idaho, right? Any of those states where it's like,
I went to a store opening in Ontario or Oregon. And the only reason for Ontario, Oregon is that it's 30 minutes from Boise.
Exactly. So those are the opportunities where you're like, you can still make money because post 280E, you have to have a lot of EBITDA, right? In order to actually have, anything drop to the bottom line. I joke, I'm like, you got to take $1 of revenue and walk away with a nickel to 10 cents in your pocket after the government's taxes, after the debt, after all of your expenses.
What's crazy to me is there are so many people that I know in good positions, successful people that look at the cannabis industry and think it's still just printing money. They think because they see it growing and they see it everywhere and they see it more and more. And it's funny that I talk to people. I was just in Montana, and I was talking to a couple of friends of mine, and they were telling me like, I was telling them how bad the industry is doing. They're why we see it everywhere. There's dispensaries everywhere. I'm like, you guys don't understand the taxes. You don't understand 280E. I'm like, it's a Schedule 1 substance.
Right.
They can't deduct any of their business expenses. They can't get any kind of loans, anything else. This stuff we've talked to, we're blue in the face. But what blows my mind is how much it is really internal to our industry that we know this, and maybe the financial professionals that focus on this industry. Outside of that, people see weed, they see it coming online in new states, they see new stores, they hear it on fucking podcasts being advertised. They think we're doing well.
It's very popular to talk about. I think it's fun to talk about. It's part of a social change, which I think is something that drew you and I, and like, we are changing things, right? This is something that we're going to look back on and say, hey, we ended the war on drugs. Like, it was a long slog, and But I think there's a lot of purpose in that.
Yep.
Which makes a lot of people operate unprofitably to feel that sense of purpose. But when you actually get into it, you realize what operating in a federally illegal business really means. Which,
Yeah.
fine, you can talk about taxes, but talk about safe banking. And okay, yeah, people have access to bank accounts, but it might cost you $1,500 a month, right? And you might be with some small regional bank
Yep.
that has a really poor website that goes down all the time, and you're just getting nickeled and dime and fees. Where if you're at a big bank like J.P. Morgan, they will likely pay you for your deposits.
Yeah.
If you're in cannabis, you have to pay someone to have your deposits
Yeah.
with them. If you're negotiating legal contracts, you have 40 pages of disclosures on what it means to operate in a federally illegal industry. You have to negotiate back and forth. So at every turn, the federal illegality just increases costs. And then when you layer in the fact that you can't write off operating costs because of 280E, it just becomes very difficult to be profitable.
It is, man. And you don't see too many people doing it right now. And the good thing is, there are funds out there like you guys, but that is really more towards the people who have hard assets, people who have physical retail locations. I worry about the asset light model, the people who come in and they have all they have is essentially their IP, their brand, and they don't have any physical assets. There are a lot of ones that have grown. They've invested a significant amount in human capital. They have jobs. They're in multiple markets, hoping to get to a point of either an exit or more capital so they can continue to grow, or some kind of federal legality. What happens to them? Do we just start seeing brands get absorbed into hard retailers? Are they going to start to combine? Are they going to disappear?
I mean, someone asked me last night at a dinner, like, oh, what are your favorite markets? And yeah, I mean, there's a simplistic high level answer of like, oh, New Jersey's attractive because there's not that many licenses there. But the reality is, it's about the entrepreneurs who can go into a market and actually make post-tax profits.
Yeah.
So if you're on the West Coast, that likely means a light infrastructure model. That means that you're a brand, right? You're a top brand that's selling 9 figures of gummies or vapes or pre-rolls, right? And you manage your supply chain and your cost structure, and you've competed against all of the other brands that are out there to actually run a profitable business. So in that respect, the asset light model is great. Now, if you're on the East Coast and there's no infrastructure, probably doesn't work out so well. Now you're talking more about real estate, right?
Yeah.
Having good retail locations and having low enough cost of goods sold so you can still be profitable in your cultivation while prices are still high, or being on a border play like your friend in Oregon on the border of Idaho, right? So it's just really having that strategic, holistic understanding of how hard it is and why it's hard, and finding the profitability out of it.
That's a funny thing. I remember, going through this and building a brand. I remember people like, what do you look for when you go into a new market? I go, well, what market is it?
Yeah,
because it really does depend, right?
Totally
How
depends.
does that market operate? Right. Is it completely vertical? Is it not? Are the distributors? What level do I want to go in? Do I want to talk to the distributor? Do I want to go vertical in that market? And and same thing. People ask you, and it really is. I interviewed Kimberly Gamboa of Cureleaf recently, and she's like, I operate 32 different businesses.
Right.
And I'm like, oh, you're only in 19 states, but
Yeah.
but yeah, every market runs completely different, and it's crazy because there are similarities, but you really do have to understand how to run your business 32 different ways. I think that's maybe it's 33, 35 at this point. Who knows?
Sure. Well, yeah, I mean, there are markets that rhyme with each other, right? But no two markets are the same.
Yep.
I kind of think of it as a tale of two cities, a spectrum of West Coast to East Coast. And, there's exceptions, obviously, like Massachusetts, right? Much more open market, a lot more operators.
Yeah.
Then you have groups like Florida, where there's 22 licenses and you have to be vertically integrated, and you can't sell wholesale to anybody else. So if you're an asset light model and you're in the consumer packaged goods realm, Florida is an impossibility, because you can't put all that money into the infrastructure to sell within your own.
Not only that, everyone is, why should I pay you X% to sell my own product?
Exactly. It doesn't make any sense. Where that model would work really well in California, Arizona, Colorado, even in Michigan, right? Which is in the middle. So again, there's exceptions, right? In the Midwest, you got Michigan. On the East Coast, you've got Massachusetts that act a little bit more like the West Coast market.
Missouri, from what I understand, is starting to head that way too. I'm pissed. I just drove through Missouri and I didn't have time to stop at a dispensary, but just looking at the menus, it has that California feel to it.
Yeah. I mean, they're going, it's not an unlimited license model, but there's going to be enough cultivation and capacity where cultivators are getting better at growing.
Yes.
Like if you look at agricultural crop yields in corn or spinach over the course of 20 or 30 years, yields go up and up and up with groups like Monsanto, even for the same amount of canopy. So even if they're not adding additional canopy, which they almost always are in these markets, they never take canopy out of the market, right? Eventually you commoditize and commoditize. And I feel like I repeat this on a daily basis, but as long as it is profitable to grow cannabis, people will do it until it is no longer profitable. And the only thing that protects you is these artificial strategic moats that, you know, won't necessarily last. Now at Chicago Atlantic, a lot of the kind of, I don't know, secret sauce is in structuring, right? I'm very comfortable that, you know, Missouri, we invested in several companies in Missouri a couple of years ago, 3-year terms. I'm very comfortable that Missouri is going to do well for 3 years from 2020 to 2023. I would not make a 20-year loan over there. I have no idea. I think it will ultimately be very commoditized, but you know, so structuring is really an important piece of how you actually make money in this industry.
You know, it's funny you say that too, because I remember, so I did a 5-year projection on every market in the country, at least maybe like 15, 18 of them, right? And I want to actually go back and like check my math on that, because you know, I remember looking at the markets were at the time, looking at what the growth in each market would be, cross-referencing that with the population, right? Because you look at something like Arizona that was up and coming, 1.2, 1.4. There's only 8 million people there. Right. So to try to compare it and say that it can never touch California with 38 million people plus tourism, like it doesn't, you can't, there's not enough people there. And then you look at a state like Florida that had 1 billion, you know, 1.2 off of, at the time, I want to say 600,000-700,000 patients. And I'm like, between, you know, 25 million people and the tourism here, like, so starting to look at that. So I'm curious to actually, I'm going to go back and maybe I'll make like a LinkedIn post to see how that ages in 5 years.
Yeah, absolutely. I mean, you know, I think the New York is a sleeping giant that's starting to come on now. It's very, very slow.
If they can ever combat the black market there.
Well, of course. But I think so, you know,
because there's the black market we see on the streets, and then there's the black market that's been there forever too, that hasn't gone away.
Delivery bikes. I mean, High Maintenance is one of my favorite shows. I don't know if you've ever seen it, but it literally just chronicles cannabis bicycle messenger.
That's cool. I'll have to check it out.
And it's like, it's more just like talks about the culture of cannabis and the different people who get it. But like, you know, this is an older show now, right? It was on 5 years ago or so. And this has been pervasive in New York, Chicago for decades and decades and decades. But what I'm particularly excited about when I look forward in cannabis, looking at, hey, like what is going to turn this ship around and make this, you know, successful, fun industry to work in. Obviously reform, financial reform, taxes, 280E, some sort of descheduling, which is, you know, ultimately inevitable, uplisting so that you actually have stocks with liquidity, financial institutions coming in. And the second most important piece is handling the illicit market, which you can't even begin to address until you have a legal replacement. So trying to stamp out the illicit market in New York right now is a game of whack-a-mole that the war on drugs clearly failed. We've been trying to whack-a-mole for our entire lives.
It's like one last ditch effort that's just not going to work.
Totally failed. But when New York starts to legalize, they start to build the legal infrastructure. I think you're going to start to see the groups in California. Frankly, like if you're in California or Oklahoma, I think a lot of those operators are losing money legally and making money illegally, selling to markets like New York.
I would possibly agree with you.
Yeah, right. I mean, you know, be Sherlock Holmes.
I have no confirmation of that, but
yeah, exactly. Right.
Yeah, man.
So
see, that's the kind of stuff you don't hear up there.
Yeah, absolutely. That's so only
yeah, man. Steve, what do we have to look forward to this year? Anything, or is this going to be a bloody year? We'll see where this is going.
Yeah, long side. Unfortunately, what I have learned in my 8 years of studying the cannabis capital markets is that there is not a lot of political willpower outside of presidential elections.
Yep.
The reality is, you know, in primaries, in midterms, you just don't get that many folks out to vote. And the people that do are like very specific issues. And like cannabis isn't powerful enough to make it in midterms. Now, if you polled everyone in the country, he said, hey, are you pro cannabis, pro legalization? It would win by a landslide, which is why in presidential election years, there is political willpower and you actually can get votes. Now, Joe Biden, Donald Trump, we have the oldest legislature in the history of our country. They're not cannabis people, but they're absolutely politicians. They absolutely want to get votes, and they have to. So I do believe that in 2024, cannabis will be used to buy those votes. I don't know, my crystal ball is as good as yours. I don't know exactly what that looks like, but I am very hopeful that in 2024, these are tight races. It'll be on the ballot in some way or another, whether that's safe banking, a descheduling. Obviously, Biden came out and said, "Hey, we're taking a look at this thing." I think that's political positioning for 2024 to buy the cannabis votes. So how that looks, I don't know. But 2023, I don't see much political willpower. I hear about a recession every day, focus on the cannabis capital market. So I think this is going to be a tough year with some really high quality buying opportunities for the groups that are profitable and have financial backing.
Very nice, man. Well, I appreciate you sitting down with us.
Anytime.